Hello, exercise 11:15. Let's get started. This is what you're looking at on your screen is called a GAAP income statement. Not the company. This is two A's, GAAP. FASB requires this to be reported to external users. We're going to learn in this problem the contribution margin format income statement. This is the gross margin format income statement. We're going to look at the contribution margin. Contribution margin is not GAAP. That's for internal use. Now, this conversation could lead into our companies, in addition to GAAP required reporting, also providing non-GAAP reporting information. Yes, there are some companies that do produce non-GAAP information. For example, EBITDA, some of y'all might be familiar with that, which is earnings before interest, taxes, amortization, and depreciation. All right, so this is GAAP, and what we're going to produce as a part of this problem is a non-GAAP income statement called the contribution margin format. Both things that I just shared in the first minute of this video could be on your test. So what we have is sales revenue minus cost of goods sold. And remember, cost of goods sold is made up of three products if it's a manufacturing company. Direct materials. I was thinking about the balance sheet all of a sudden. Direct materials, direct labor, and overhead. Depreciation on manufacturing equipment would be, for example, in cost of goods sold. That gives us gross margin. Gross margin tells us how much money the company earns over and above the cost of goods sold when it's sold. So 250 minus 130 is 120. Their gross margin is 120,000. From there we expense period costs, which remember I have said going back to the last chapter that period costs, you can easily think of them as all things related to selling and all things related to administrative costs that do not involve manufacturing. Sales commissions, administrative salaries expense, like this president, CEO, for example. Advertising, Facebook or TV, radio ads, whatever. Depreciation expense. This depreciation expense is not a product cost. It's not on manufacturing. This depreciation expense could be on the administrative office building, for example. And then shipping and handling expenses, $2,000, right? And they are treating that shipping cost as a selling item. For example, if you're not a Prime member of Amazon, we're going to put that one aside, and let's just say the minimum order. We're Prime members at our house, so I don't know what the minimum order is, but let's say it's $25 still. I don't remember. Anyway, so if you order more than a certain dollar amount, you get free shipping. At that point, the shipping handling expenses incurred by, let's say, Amazon in this example, would be a period expense. Okay? Pretty good. So Prime customers are paying for this. All right, anyway, that's just brilliant marketing. All right, anyway, so net income is $19,000. I'm going to tell you right now the answer to the contribution margin format income statement. Before we even lift a pencil, $19,000. We'll start with $250 on the contribution. This is a gross margin income statement. We'll start with $250,000. We'll end with $19,000. It's just in between the starting and ending point. We're just going to chop and slice and dice the contribution margin income statement a little differently than the gross margin statement. But either way, we start and end at the same place. Okay, so I've already recreated a gross margin income statement, $250 and $19,000. Everything's in there. Before we dig in a little deeper, let's pull out the pen. And let's mark off what is a variable cost and what is a fixed cost. Cost of goods sold. That is a variable cost, okay? Sales commissions, variable cost. Just think about it. Cost of goods sold. We don't sell anything. What's our cost of goods sold? 0. Sales commissions. We don't sell anything. What's our cost? 0. Okay? And then shipping and handling would be the same concept. If we don't sell anything, then we don't ship. And that would be 0. So volume 0, it would be 0. Easy way to think about that. Now that leads us to what is fixed cost. Anytime you see the word salaries, advertising most always is fixed. I guess I could see the case where it could be variable, like if you're paying for clicks to Google or some social media advertising that they pay, you know, for clicks or you know, maybe even going to the website. So that would be a variable cost. But if you see it like that, that's variable. And unless we tell you otherwise, all depreciation expense is going to be fixed. There are times where depreciation expense could be variable. You know, could be on the production volume or depletion rates or something like that. So why did I just do that? Simple. We're going to divide the contribution margin statement. I copied it over. All right, so we're going to divide the contribution margin income statement into variable and fixed. Okay, so the contribution margin, very important, you need to know it for the test, is sales minus all variable costs, total variable costs, equals contribution margin. Okay, all right, so we'll bring the sales over, and I've already told you the answer is 19,000, but we'll check it even though I'm going to put it over there now. All right, so cost of goods sold, we said was a variable cost. You can replay the video and look at that again if you need to. All right, so cost of goods sold is a variable cost. And I'm just going to copy these over because I can. It's Excel, right? Sales commissions is a variable cost. And so is shipping and handling right there. All right, that gives us contribution margin, okay? Oh. I was going to do it one way, then I changed my mind and did it another way. All right. Why is there it goes. I kept hitting the key and it wouldn't let me do it. All right, 93,000. That's your contribution margin. I could re-record the video, guys. I'm just rolling with it. All right, so contribution margin is 93,000 right here. But the gross margin is 120. Again, gross margin income statement, FASB or GAAP, that's what you use for external. This is internal. So fixed cost, admin salaries, 30,000. Depreciation expense, unless we tell you otherwise, is going to be fixed in this class. Advertising. All right. So let's just make sure. Let's just make sure that it's 19,000. So we'll add up those three fixed costs to the contribution margin of 93,000, and we also get 19,000.